Hi, everybody. It's Ronda Cobb, the money coach. Yep, it's me again. Welcome to today's show. In part one, we started our discussion of health insurance and healthcare cost savings. And it's a timely topic, no matter when you discuss it. But right now, it seems to be extremely topical. You cannot get on social media without seeing some posting of some hospital system or some corruption or some healthcare problem, somebody going without care because they can't afford it, or something like that. So, in my mind, we all need to work with each other and together and for ourselves and our families in order to help fix this problem. That's the point of these shows. So that's why I went across two shows because there's so much to cover and the information is so important. I want to make sure that you get plenty of options so that you can make the best decisions for yourselves. So we're going to continue on here in part two of Can You Afford Traditional Health Insurance? Now, remember in part one, we discussed the frustration of people during open enrollment. Oh, honey, were they frustrated? And the high cost of health insurance for our example family of four. And I really think I kind of lowballed what that was. The example of $1,000 a month for the premium and another 10 for the deductible for the year for a total of 22,000 out of pocket before they ever saw any reimbursement whatsoever for the year. That might be just a tiny little lowball, but anyway, it's just an example. Um, if you're a family of four in my area where I actually have a license, we would have to customize your quote. So don't take that quote to the bank and say, Rhonda said I could get it for $1,000 a month. Maybe you can. It's an estimate. Pretty close, though. All right. So then let's go and keep on going. Because remember how we wondered if maybe we wouldn't be better off financially and even health wise if we jumped off the bandwagon, that bandwagon that we talked about, that says we should surrender our health insurance and health care choices to the bureaucrats, the millionaires, the billionaires, the hospital administrators, and the insurance companies. Remember the bandwagon? Yeah. So, what happens if we jump right off of that bandwagon? Because so many people I talk to feel like their health insurance premium is basically a waste of money. They feel like all they're doing is feeding the insurance company um, machine. What would you rather do? Would you rather manage your own health care? Are you willing to take responsibility for that? So we left off with the importance of long-term disability insurance. Remember, you definitely want to explore that option to save your financial house from ruin if illness or accident comes into your life to upset your normal state of affairs. And you want to explore that whether you have traditional health insurance or an alternative. Short term and long term disability are add ons that protect your stream of income. They have absolutely nothing to do with what kind of health insurance you're carrying, but it's extraordinarily important. Okay, I stressed that enough. I think I beat it into your brain, right? So, moving on. I started to sound like maybe I'm an advocate of nixing traditional health insurance. And let me answer that definitively. Yes and no. I want to present the options so that you can make a great decision. Because from where I'm sitting, most of that $25,000 would be better put into your savings, your retirement savings, your emergency savings, or your children's future. But that's my opinion. You don't have to worry. The insurance company isn't going to go out of business if you make an alternate plan. And if you want to come back in a year because it didn't turn out swell for you, you could always do that too. But keep listening because I'm going to mitigate the downside risk of foregoing traditional insurance and expensive health insurance in this part of the show. This is a big subject, and the only one show isn't enough time to get you all the information and solutions you might need. but we're going to cover some of them. So here's my question. If you don't have a chronic condition and no one in your family has a chronic condition and you never meet that great big deductible and you're struggling to save money, do you really need to spend all that money on traditional health insurance? So here's a couple options for you to think about. If you find them intriguing and you want to know more about them, send me an email. I will send you a link. I'll send you a brochure. I'll answer your questions. And I'm not going to hold your little feet to the fire and say, oh, you requested a brochure. Now you have to buy something. By now, you should know me. I'm not that kind of person. I'm just not that high pressure. If you want it, great, we'll hook you up. If you don't, well, okay, that's your decision. But don't come back later and cry that I didn't help you correctly if you said no, 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 no. Just saying. Okay, so for those who are uncomfortable with the thought of not enough coverage, well, what if they're consumed by the what if, or they've listened to the fear mongers for a little too long and it seeped in? I want you to consider a health sharing ministry. Well, what's a health sharing ministry? It's rather like a co op where hundreds of thousands, yes, hundreds of thousands of members contribute money every month. Then the administrative staff of the sharing ministry negotiate reduced bills. They set up providers that work with them, and everyone shares in the savings that they negotiate, and everyone shares in the bill paying with the money that they send in every month. It's a great plan for those who meet the group requirements and have similar beliefs as the sharing ministry group. That is one requirement of joining the group. They do like you to agree on a consensus to the basic, paradigm of their group. Excuse me, I'm so sorry. And it's a great plan for people that do. The monthly portion that you send in tends to save 1/3 to 1/2 from traditional insurance premiums, and enrollment is open year round. Now, for our family of 4, let's say their annual household portion is $5,500. That's about half of that traditional deductible for our family of 4 that was $10,000. I am so sorry, you guys. And their monthly portion is about $530. Again, just slightly over half of that traditional insurance that was $1,000 a month. Now, everything is covered in this health sharing ministry except rehabilitation for addictions. They don't cover that. This is a broad overview, okay? And it is not a solid quote for every family of 4 because the amounts vary based on ages of the family member. Plus, you can choose your annual household portion. If you get a smaller annual portion, of course, your monthly share is a little bigger. But if you can afford that bigger annual portion, then of course your monthly share is a lot smaller. So you have to you have to really look at it. Somewhere in the middle of it, I've noticed there's a sweet spot where, oh, this is really your best deal overall over the course of the whole year. Now, to save more money even over the course of the year, you can pair that plan with a plan that covers a few of your basic doctor visits each year and many of the screening services. Our family of 4 could have that plan, the one that covers a few doctor visits and the screening visits, for just under $200 a month. If you're one of those people or one of those families that tends to run very healthy and you use very little care, But you do want access to the occasional visit, the screening things, the healthy child visits, and you want a huge discount on prescriptions. This could be a very wonderful way for you to save money. Let's see. About $25,000 minus the two and a half that you're going to spend on this plan. Wow, that's 22 and a half left for your savings account. That's wow, wow, wow in a good way, not the bad way we started part one. Now, what happens if you combine the two? Well, you're still going to save over $300 a month and you end up with equivalent care to traditional insurance. This, in my mind, is worth exploring or investigating. So now it's up to you. But if you're young and healthy, and so is your family, this is a great deal because that $300 a month could go right into your emergency savings account, right into the future of your kids' savings account, whether they're going to college or starting a business or going to a trade school. You know what I mean? Future of the kids' account. But if you are uncomfortable with an alternate thinking pattern or plan, if you have bought into the advertising that you have to have traditional insurance, then by all means, you must do what feels right for you. But if you're single and healthy and you just want the basics available, you could pocket the huge premiums into your savings for your retirement, your savings for a house, your savings for whatever, and get the plan that covers 4 doctor visits and the prescription discount and the preventative screenings. And for one person, guess what? It's a really affordable 99 bucks a month. Really affordable. So doing that, and if you had some oops in the middle of the year, well, the money you're saving every month, you would have some money for the oops in the middle of the year. Okay? And they don't require you to have a tiny income to get that rate. That rate's available to every person that chooses to investigate this plan. And of course, you can combine this policy with the policy that you receive from work and eliminate a lot of the copays and deductibles that would be on the policy from work and save it for the stuff that's truly the great big giant whoops or what we call catastrophic. Now that's pretty cool, right? I thought so. I'm not unique in thinking this. A lot of people think this, but I just want you to have the ability to look at it. Now, the one that pays the lump sum upon a big diagnosis or a big accident is really quite affordable too. For our family of 4, it's about $99 a month and the lump sum is $10,000. So that means if someone in your family got a surprise diagnosis of say the big C or they had a heart attack or a very serious accident, that plan would pay, assuming the accident was covered, the $10,000. Well, that covers a lot of your copays or deductibles or a lot of missed work money right there. So that's something to consider too. And maybe that plan right there would keep you from having to file bankruptcy if you got hit upside the head with a big whammy of a bad diagnosis. Now, if you combine the simple plan above, the $99 a month simple plan, and the lump sum plan, you'd be spending about $300 for our family of 4 per month, or about $170 for our single person per month, and you'd be getting quite a bit of coverage, which would be really nice for a really small amount of money. You would not be getting comprehensive coverage, but you'd be getting a nice amount all the same. Better than nothing, not as expensive as comprehensive.